Hello to it and welcome. This is Learn Extra Mindsets. My name is AB Abraham, also known, but otherwise I am chilled with you on a beautiful Thursday, grade 11s. Welcome to this show. We're about to learn more. I'm joined by Mr. Martin. How are you, sir?
Hi, I'm good, thanks, Abraham. How are you?
I'm feeling good. It's a Thursday. We're learning more. It's been revision the whole day, the exam revision, the Mindsetters. I've seen them on the page interacting with us. They are learning a lot because today it has been accounting throughout the whole day.
Today's a good day for accounting.
Yes, of course. Are you ready to learn more with us?
Yes, I'm ready. I hope the learners are ready. And I'd also like to say a big shout out to the grade 12s who are joining us, because I know that this is a topic that's also covered in grade 12. So hello to the grade 11s and all the other mindsetters that want some revision on grade 12.
Awesome. Well, before we talk to you about what we're doing today, let me just tell the Mindsets about the exam revision package that we have for them, which is an awesome competition whereby Mindset and Samsung have partnered together to bring you their Going the Distance Together competition, marathon competition. As you can see here, I'm having a tablet, which is from Samsung, with the Learning Hub, where you can access some tons and tons of revision packages from Mindset content. But I want to show you something, guys. I just want to brag a bit, you know, Martin. We're having this Galaxy Note 8. It has been won. One of it has been won. We're having about 2 more to give away, but all in all, we're having about 8 more gadgets to give away from Samsung. It is a NAS S Pen, which is so much user-friendly. As you can see, you can do everything. It has got a widescreen and 8.0 screen and a fast CPU. It processes very fast, 1.6 gigahertz, and otherwise you can also view some multiple windows. I'll be telling you more about the competition, and without wasting any time, what are we doing today?
Well, today we're doing fixed asset mindsetters, so that's a section that I'm sure you know all about.
All right, interesting. Let me tell you, to take part in this lesson, make sure that you join me on Facebook. Go to facebook.com/learnextra. Like the page, tell your friends also about the competition. I'll be giving you a race number. What's going to happen with that race number, I'm not supposed to give you actually, but just because I'm a nice guy, I'll post it on Facebook. Just why not? Because I want you guys to win. You know, I'll be giving you the race number, but otherwise it's on the last page of your notes. Download the notes, get the race number, and then I'll post the link. The link is simple. It's mindset.co.za/learn/win. That's where you get your entry form. Otherwise, follow us on Twitter @LearnExtra. And let's learn more. Download your notes and let's learn.
Okay, thanks, AB. So today we're going to do a very important section in the grade 11 syllabus that's also repeated in grade 12, and that's the section on fixed assets. AB, if I ask you if something's fixed, what does it mean?
It means it's fixed. It's not moving. It's not going anywhere. It's there.
Not moving. It's not going anywhere. So when I'm talking about fixed assets, what I really mean is the assets of a business that are usually lasting for a period of longer than 1 year. Fixed assets are items that we use over and over and over and over again to generate income for a business. For instance, those Galaxy tabs that you have there, those Galaxy Notes, those would be counted as fixed assets for a business if we're using them to generate income. I'm sure mindsetters, you know what fixed assets are. Let's just quickly refresh your memory. There are 3 types. There is land and buildings. The second one is vehicles. And the third one is equipment. So those are the fixed assets of the business. Those are the things that we have, the assets that don't move, that we're going to use for a long period of time in order to generate profits. You can remember the 3 of them just by looking at the first letters, L, V, and E. L, V, and E. Can you remember it the way because those are letters in the word love, and I'm sure you all love this section. So without further ado, let's have a look at what we're going to be discussing. So today we're just going to revise the various concepts relating to fixed assets, and we're going to work through various related questions. So I've got a past paper question for you, an end of year question, that we're going to work through and that we're going to look at. And the key skills and the key objectives that you have to remember here, you have to first of all know how to calculate depreciation. That's very, very important. Okay, so revise, make sure you know how to calculate depreciation, and make sure, mindsetters, that you know there are 2 methods of calculating depreciation. You need to be able to do both of them. There is the fixed installment method, and the second one that you need to know is the diminishing balance method. So make sure you revise these, because these 2 methods are going to be essential in calculating depreciation on your fixed assets. That's an important skill. Apart from depreciation, you're also going to need to know the skill of drawing up the asset disposal account in the general ledger. And that is very, very important. Just now I'm going to take you through the 5 steps that are necessary in order to draw up the asset disposal account. Think in the meantime, see if you can answer my question. Do you know when we draw up the asset disposal account? Under what circumstances is the asset disposal account prepared? Think about it and I'll tell you the answer just now. Then finally, we also need to know the very important note 3 to the balance sheet, which is the note on fixed assets. So you know that you will usually get a long question in your final exam, which is all about your partnership financial statements. And you have to know how to be able to prepare every note on the balance sheet, including this very important note on fixed assets. So those are the key skills that you need to revise when preparing for your exams that are coming up. So make sure you know how to do all 3 of these steps. You'll see that the question that I've got for you involves all 3 of these different skills, and we're going to work through the question together so that you see how to apply them. Okay, so without further ado, let's look at our question. So our information book here says, this is a question, by the way, that is adapted from the grade 11 exemplar paper in 2007. I know that's quite a few years ago, but it doesn't matter, the concepts are the same. Work through as many old papers as you can when you're preparing for your final exams, because you must be able to understand how to answer questions under time constraints and under pressure. So this is a question on recording and reporting of fixed assets. And the question states that there's a whole bunch of information here. First of all, it tells us our depreciation information. It says depreciation on vehicles is calculated at 20% per annum on the straight line method. Mindset is, when you're answering a question like that, make sure you always know 2 things about depreciation. What is the rate of depreciation, in this case 20%, and what is the method of depreciation? In this case, this is the straight line method. For those of you that know other terminology, the straight line method is also the method on the cost price, and it's the same as the fixed installment method. So what we're going to do when we calculate depreciation, we are going to calculate it on the cost price of our assets, and those are the assets that are vehicles. But there's a second set of depreciation, which is depreciation on equipment. Let me use a different color so we don't get confused. Here they've just told me what the depreciation on equipment is, and they've simply told me that it is 11,400 Rand. So when I do this question, I'm not going to need to calculate depreciation on equipment for the year, but make sure that you revise how to use the other method, which you'll remember is the diminishing balance method. So Abram, I'd like to throw a challenge out to our mindsetters. Our third fixed asset is land and buildings. So mindsetters, I'd like you maybe to answer us on Facebook, see if you can answer my question. Why do we not depreciate land and buildings? Most questions have got depreciation on vehicles, on equipment. Why do you never see a question that asks you to depreciate land and buildings? We'll talk about that later on. Let's see if you can answer that question. Send us through your answer. Okay, so we've been given our depreciation rate for vehicles, and we've been given our depreciation method. If we look further down, it tells us that we've got some balances in the ledger. We've got our vehicles at the cost price of 880,000, and we've got accumulated depreciation on vehicles of 250,000 Rand. Let's just quickly revise some concepts here. The cost price is the original cost price. It's the price at which the vehicles were originally bought. Back in the day when we bought them, they added up to a total of 880,000 Rand. Accumulated depreciation, on the other hand, is how much they've depreciated up to the 1st of March 2006, which is the beginning of our financial year. So those are the first 2 information points that I'm going to look at. Now we know what the rate is of depreciation, and we know that we're dealing with vehicles and equipment. Let's see what the question is asking us to do. Our first question is asking us to calculate depreciation on vehicles. So let's just highlight that. Calculate depreciation on vehicles for the year ended 28th of February 2007. So we are going to, first of all, have to calculate depreciation on the vehicles for our whole entire year. Now, you need to know the method of calculating depreciation, the method that your examiner is going to look for when he or she marks your paper. we normally look for three separate parts to the depreciation calculation. I normally summarize this as old, sold, and new. You need to consider when you calculate depreciation, what is the depreciation on your old assets? In other words, the ones that you've had since the beginning of the year and the same ones that have been kept throughout the year. So that's our first part of depreciation, calculating the depreciation on our old assets. The second thing that we need to look at is to see whether we have sold anything throughout the year. So if we've sold something halfway through the year, then we need to calculate the depreciation on that item from the beginning of the year up to and including the day on which we sold it. So that's the second part of the calculation, is sold. Then the third part of the calculation, which is usually the easiest one of the three, is to calculate any depreciation on our new assets. New assets being any equipment or vehicles that were bought during that period of time. When your paper is marked, your examiner is going to look to see whether you understand the old and the sold and the new, and you need to do all three of those separate calculations to be able to get the 7 marks in this question. So let's have a look at the information and see what we can do to calculate these three things. So I know that much of this here, which is my opening balance, much of this is going to be the old equipment. However, I need to pay careful attention as to whether I have sold anything. And sorry, it's vehicles, it's not equipment. So I first have to look and see, before I can calculate old, I need to see what the value is of the vehicle that I have sold. Let's go and see whether we have sold any vehicle. Look through this question. Second part tells me, number 3 says, that I bought new equipment on credit for 105,000 Rand. Okay, so this is new equipment on credit, which I bought during the year. That was bought on the 1st of November 2006. So this is going to be equipment. I need to bear that in mind when I'm doing my equipment calculation. But right now I'm dealing only with vehicles. Then it tells me 2 other important pieces of information. I paid Urban Technics the following on the 28th of February 2007. Number 1, 8,000 Rand was paid for installing a sound system in a vehicle. We'll come back to that sound system later on. It's going to be important when we do the next question on the fixed asset note. And then it tells me 3,000 Rand for repairing the air conditioning system in the vehicle. This, by the way, happened on the 28th of February 2007, which is the end of our financial year. So the truth is, even if there is depreciation on this, we don't need to calculate it because we've got the end of the financial year. It's brand new at the end of the year when we've bought it. So let's look at information point 5, and this is the long one. Information point 5 tells me that I traded in a vehicle. Abram, what does it mean if I trade something in?
It means you're putting it in for sale or maybe for an exchange.
Right,
Well,
an
like trading a
exchange
car
for a new one.
or
So
an
you're trading in a
upgrade.
car, upgrade, get a better one. I'm sure
Yes.
many of you have traded in old cell phones, gotten new cell phones. People trade in cars all the time and get new ones in return. So when you have a trade-in transaction, what you must remember is that you are at the same time buying and selling something. You are getting rid of your old vehicle and replacing it with a new one. Now the information tells me that the trade-in value, that's the price that I'm getting for this vehicle, offered by Pretoria Motors was 32,000 Rand. So this 32,000 Rand is the amount that I'm getting for the new vehicle, for the old vehicle that I'm trading in. And it also tells me that the cost of the new vehicle was 180,000 Rand. Finally, we've seen what I've looked for in this question. We finally got the cost price of the new vehicle. So I normally suggest that when you're doing depreciation calculations, start with the new one because that's the clearest and the simplest to do, but we'll do it in a minute. Then it tells us that the balance of 148,000 due to Pretoria Motors will be paid over the next 6 months. So basically what we're doing here, mindsetters, is we're buying a new car, but we're trading in our old car to get this new car, or whatever vehicle it is. It might be a delivery truck or something. We are trading in the old car and getting 32,000 Rand for it, but the new car costs us 180,000, and we are actually going to pay off the remaining 148. That's the remainder of the cost price of this new vehicle. We're going to pay off over 6 months. Okay, but we know now that we've got a new vehicle, And the cost price of this new vehicle was 180,000 Rand. We also know that we bought this new vehicle, or got this new vehicle, on the 31st of December 2006. So the first thing that I'm going to do is calculate depreciation on the new vehicle, and then I'm going to get to the old and to the sold one. So the new vehicle's cost price was 180,000. To do the calculation for the depreciation on the new vehicle, what I'm going to do is I'm going to take its cost price, which is 180,000 Rand. Now, because depreciation is done on the cost price, we are going to not subtract anything. We're going to just use the cost price in full. What we're then going to do is we're going to multiply it by our depreciation rate. And our depreciation rate was given to us, remember at the beginning of the question, 20%. So I will return here and multiply it by 20 over 100. Now, the next step is very important. What we now have to do is count the number of months for which this new vehicle was in our business. So, if you see, the information tells us we purchased this vehicle on the 31st of December. This is our critical date. We purchased it on the 31st of December 2006. So we're going to count from the 31st of December up to the end of our financial year, which is the 1st of March is the opening balance, so the end of our financial year will be one day before that, the 28th of February. So we need to count from the 31st of December 2006 up to the 28th of February. That's going to be January and February. We're not going to count December because we sold this on the 31st of December, so we didn't have it for a month. This business obviously celebrates New Year by trading in its vehicles. So we had this vehicle for only 2 months in this financial year, so all we're going to do is we're going to multiply this by 2 over 12, because we had it for only 2 months in this financial year. Okay, mindsetters, try and do this calculation during the break. It's about time to take an ad break now. So try and do this and see if you agree with my answer when we get back.
And I have your answers also after the ad break, because you asked some questions earlier on.
I
So
did.
the mindsetters have responded.
Excellent.
Right, mindsetters, do stay tuned, because after the break, I'll be telling you more about the competition. I'll post a picture on Facebook with 3 gadgets, actually, the tab, the note, and the tablet. Just like, share, and comment. Let me know which one do you like. And then if I see that a lot of people would like my favorite, then that's when I'm going to give you the race number. I'll just be a good guy and do that. See you after the break. Welcome back, pre-matriculants. I must say that soon you are matriculants. So let me just give you that benefit of the doubt and say, because you are a mindsetter, you are our matriculants for next year. Otherwise, I told you about this awesome competition. Now, I've shared a post on Facebook. On that post, if you'd like to win a tab, you're just going to like that post. If you'd like to win a tablet, you need to comment on the post. But if you'd like to win this awesome Galaxy Note 8, 8.0, all you need to do is to share. So if I get about, because my favorite number is 8, and this is an 8.0. So if I get 8 shares, that's when I'm going to give the mindsetters the rest number. I think it's fair, hey?
I think it's
because I give
definitely
you
fair.
something, you also give me something. That's how it works. But otherwise, I have your answers from the mindsetters.
Oh, that's great. Did somebody answer the question correctly?
Yes, about the land and buildings question, Navesh says land and buildings is the only asset that doesn't depreciate but appreciates. And so are other mindsetters like Moshe. They also say the same thing, and Tlaka. They're also saying the same thing because it appreciates. But now on the other question that we've asked, let me tell you, under which circumstances is an asset disposal prepared?
Right.
I had over 20 comments on that one. Kevin says when assets are sold.
Exactly. Well done, Kevin. That's quite right. Whenever assets are sold, or actually basically whenever you get rid of an asset for any reason, whether you trade it in, whether you donate it, whether you sell it for cash, whether you sell it on credit, doesn't matter. Whenever you're getting rid of an asset or disposing of it, then you are going to prepare an asset disposal account. Well done.
I must say, Martin, I like this comment also from Karabelo. Karabelo Sihlabo says, when an asset is sold and when we want to calculate the profit or loss, except in the situation of the cash flow, because assets are sold at carrying value and there is no profit or loss.
Excellent. Well done. You can see so that some of the mindsetters have been studying.
Yeah.
And that's very good answers.
Great. Let's keep
Okay.
it like that.
Yes. So without further ado, let's have a look at the next piece of information. I'm sure you tried to calculate this during the break. it was the depreciation on a new asset, and I'm sure that you got the same answer by entering it into your calculator. 180,000 times 20% times the 2 months that we had it. I'm sure you got the answer of 6,000 Rand. If you did, well done. If not, you must have pressed the wrong button on your calculator. Okay, let's look at the next part. The next bit that we need to calculate is the depreciation on the sold asset. And this is now when we are disposing of an asset or selling it or trading it in, we need to calculate the depreciation on the sold asset from the beginning of the financial year up to and including the day on which we sold it. So our information here tells us the details of the old vehicle that was traded in. Now I know that it says here it was an old vehicle, but because we've traded it in, we've immediately gotten rid of it, we've disposed of it, so this here now becomes our sold asset. And what they've done is they have given us the details that we have obtained from the fixed assets register. Remember, fixed assets register I haven't covered today, but go over what a fixed asset register is and when you use it and why you use it. Here's an example of what it looks like. It tells us that we have this vehicle, which is a Toyota Corolla. It gives us the date on which we bought it, on the 1st of May 2003, and it tells us, very importantly, its cost price. We need to know the cost price of 144,000 because remember, we are calculating depreciation on vehicles at 20% on cost. That was the method that we are using to calculate our depreciation. And what this asset register is telling us is it's telling us all of the depreciation that's been calculated for these 3 years that I'm putting in this box since we bought the asset on the 1st of May 2003. We've had 3 financial year ends, 28th of February 2004, 2005 and 2006. Here it gives us the depreciation for those 3 years, and it's added up a total here of 81,600. Make sure you understand what this means. What this means is that on the 28th of February 2006, the asset has depreciated so far by a total of 81,600 Rand. These are the individual depreciations for the 3 years, and in total it's depreciated by 81,600. If we had sold it on that date, the 28th of February, we would have known what our depreciation is on the sold asset, because it's just this total here. However, we are selling it on the 31st of December 2006. Remember, before the break, we discussed that trade-in of exchanging this vehicle for a brand new vehicle. And we said that this is happening on the 31st of December. So what we now need to do, mindsetters, is calculate the extra depreciation, where the question mark is, from the 28th of February 2006 up to and including the 31st of December 2006. What you need to realize is that we need to count the number of months again. So we're not going to count February because it's the end of February. We're going to start on the 1st of March. March, April, May, June, July, August, September, October, November. We're going to count December because we sold this vehicle on the 31st. That gives me 10 months. So since the last time we calculated depreciation on the 28th of February 2006, this vehicle has depreciated by an additional 10 months worth of depreciation. So now we need to use the formula that we know to calculate what the depreciation on this vehicle is. So let's go back to our answer book and do the calculation on the sold. So once again, we know that it is 10 months, so we're going to multiply something by 10 months. We also know that it is 20%, so we're going to multiply by our depreciation rate. And then the third thing we need to do is we need to put in the value here that we're going to depreciate. Remember, we are doing this on the cost price. We're doing it on the cost price. So if we go back to our information, we're going to calculate it on this amount here of 144,000. That is the cost price. Please make sure that you revise the other method of depreciation, as I've said before. The other method of depreciation is the diminishing balance method. And just so I can refresh your memory, if we were doing this on the diminishing balance method, we wouldn't multiply the 144,000 out by the depreciation rate and the number of months. Instead, what we would first do is we would take this cost price and we would subtract that accumulated depreciation on 81,600 to calculate our carrying value, and then we would depreciate it by 20%. But right now we don't need to worry about it because our method is on cost. So let's do the calculation. we're going to take the cost price of that vehicle, which was 144,000. We're going to multiply it by 20%, and we're going to calculate this for 10 months of the year. So if I take my calculator here, I'm going to take the 144,000, which was, remember, my cost price of the vehicle, multiply it by 20%. You can multiply it by 0.2 or by 20 over 100, whichever method works for you. And then we're going to multiply it by 10 over 12. That gives me the answer that my depreciation on this asset is 24,000 Rand. So let's put it in here. Answer for the depreciation on the sold asset is 24,000 Rand. So now we've calculated 2 out of the 3. Remember, it's a long question, it's 7 marks. We've calculated 2 out of the 3 depreciations, and the last one that we still have to calculate is the depreciation on the old assets. Mindset is there's a trick to this, and you need to go and revise how to calculate depreciation on old assets. It's easy if you know how, so let's take a look. In our information book, we've got at the beginning our opening balances. So our opening balance for vehicles was this 880,000 that I've circled over here. Okay? Those are the vehicles that we had at the beginning of the financial year. And before I do this calculation, I just want to ask another question that maybe someone can answer. What is the GAAP principle that requires that we record the vehicles at cost price in our financial statements? What is it that requires us to keep track of the cost price of the vehicles in the general ledger? See if somebody can think of the GAAP principle and send us the answer. Okay, so this is the cost price of our old vehicles, was 880,000. Those were the vehicles that we had on the 1st of March 2006. But now things have changed. During the year, we have disposed of a vehicle, we've traded it in. So we no longer have the full 880,000. Why not? Because we've sold one vehicle whose value is 144,000 Rand. So out of the original 880 that we started with, we no longer have this one Toyota Corolla whose cost price was 144. So we cannot include that in our calculation because we don't have it anymore. Remember, when we're calculating the depreciation on our old assets, we're only interested in the assets that we still have from the beginning of the year because we've calculated sold already. This one's done. We've worked out the depreciation on the sold one. So to work out the depreciation on the old one, what I need to do is I need to subtract the 144,000 from this 880,000 because I no longer have that vehicle. I've sold it. I've disposed of it. And that will then be the cost price of my old vehicles. So let's do that calculation quickly. I'm going to take my original starting amount of 880,000 Rand, and I'm going to subtract 144,000 because I now no longer have this vehicle, and the answer that I get is 736,000. That is the cost price of the vehicles that I have left. So when we go to do our calculation, we're going to take now 736,000, not 880,000 because we don't have the full value anymore. We're going to multiply it by our depreciation rate, which is 20%, 20 over 100. And for this one, the old assets are always kept for the whole year because we had them before, we still have them now, so we actually had them for the full 12 months. So actually you don't even need to worry about the 12 over 12 because that just works out to be 1. When you do the calculation, therefore, you're going to take your 736,000, you're going to multiply it by 20% or 20 over 100, and the answer comes to 147,200. And that is going to be my depreciation on the old vehicles. We're almost done. Remember, the question wants us now to calculate the total depreciation on all of our vehicles, so all that's left is that we have to add these 3 numbers together. Let's just do it quickly. I've got 147,200 already in my calculator. I'm going to add the 24,000 on the sold vehicle, and I'm going to add the 6,000 on the new vehicle. So the final answer that I'm looking for, 177,200 Rand, that is my depreciation for the year. Just write it at the top here so we remember it, 177,200 Rand. That is the sum of these 3 numbers, and that is the amount that will appear in my income statement as the depreciation for the year on my vehicles. Okay, so that was the first question. Quite a lot of work to answer the question, but it will usually carry a large number of marks. It's out of 7 or 8 normally. Okay, so let's now have a look at the second question. The second question
Before
is
you
now
move to that, Martin, I have your answers.
Okay, great.
Almost all my answers are saying it is the historical cost principle.
Mindset is you're faster than I thought you would be. Well done. It's the principle of historical cost. That was the GARP principle that I was looking for. I wanted to know what is the principle that ensures that we record our fixed assets at the cost price in our general ledger, and the answer is the principle of historical cost. Well done, mindsetters. That's great. Okay, so let's look at our next question. And our next question is to prepare the asset disposal account on the 31st of December 2006. And as the mindsetters have correctly said, you prepare this asset disposal account on the day when you sell an asset. And it's really used to calculate your profit or your loss on the sale of an asset. Okay, so what we're going to do, I'm going to just show you a set of steps for what you do in asset disposal. And then if you learn these steps, you shouldn't have any trouble. Very first step that you do is to transfer the cost price of the item being sold to the asset disposal account. And remember, this appears on the debit side. So what we're going to do in our asset disposal account, we're going to write the date of the sale over here, which remember was December 31st, and it was 2006. What we've done is we've sold something, and we need to put its cost price over here on the debit side. Remember, this is the debit side, this is the credit side. So the first thing we need to do is identify what we are selling. Remember, mindsetters, we're selling a car, so that was a vehicle. So what we should do here is write vehicles in here, and the transfer is going to be done in the general journal. I'm sure you've done that before. What we do here is we include the cost price. So if you remember back here, the information told us that the cost price of the vehicle that we were selling was 144,000. Remember, we've used that number before. So when we're doing our asset disposal, we are going to transfer the cost price over here. That would be 144,000. Cost price always is your first step, and it goes on the debit side. Your second step is going to be on the credit side of the account, but before you get there, you have to first calculate any additional depreciation on the asset being sold from the beginning of the year up to the date of the sale. Mindsetters, we've done that already in the previous question. This here is simply the depreciation on the sold item. So remember, if we just look back at our last question, I'm just going to record it here. What we do is we're going to record the depreciation of 24,000 on our sold asset. That was not included in the value that we had so far, so we must remember it. We have to record that, and that's going to be 24,000. Abram, I think it's about time for another break.
I think so too. And on that note, I've just shared the race number because I'm a nice guy. Yeah. So mindsetters, go to the entry form, which is on mindset.co.za/land/win. You now have the race number. You don't have any excuse. But remember, you can only enter once. Since we are on leg 2, we've got about 7 more legs to stop on. Rather 8, because we're having 8 more devices to give away. See you after the break. Don't move. Welcome back, mindsetters. Now, the first device went to CISO, a Galaxy Note. If you'd like to be the winner, also enter on the link that I've posted on Facebook, and the race number is also on the page. Mindset and Samsung, that's where great and fantastic content meets great technology. Otherwise, Martin, back to you.
Thank you very much, Abram. Mindsetters, what we were doing before the break is we were trying to record the disposal of this asset in our general ledger asset disposal account. And so far we've done the first 2 steps. So now let's look at the third step. The third step is that you need to transfer the total accumulated depreciation on the sold asset to the asset disposal account. So what we need to do, remember this goes on the credit side, what we need to do here is we need to go back to our asset disposal account, and we are going to record an entry here on this side, which is also on the 31st of December. And we're going to record the accumulated depreciation on the asset we've sold over here. Now, you shouldn't abbreviate anything in the final exam. So let's try and squeeze it in here. Accumulated depreciation on vehicles. The only things that you're allowed to abbreviate in a final exam are the abbreviations for the journals like GJ, CRJ, CPJ, and then you can also make abbreviations such as UIF and VAT. But all ledger accounts you need to write out in full. That means trying to squeeze it in. So try and fit in the accumulated depreciation on vehicles over there, and the entry is always the general journal. What you need to be very, very sure of is what number goes in there. Remember, in my steps I've said transfer the total accumulated depreciation on the sold asset. So what I mean by that is up to the date of the sale, how much depreciation was there on that sold asset? It was the total for the year, so that must include the 24,000 that we worked out in the previous step on the sold from the beginning of the year up to the date of the sale. But it must also include something else. So if we look back at our asset register, which I've now cleaned up a bit, I just erased some of the things in the break, the fixed assets register tells me that on the 28th of February 2006, this vehicle had depreciated by a total of 81,600. So the 3 years of depreciation that we calculated from the day that we bought it up to the day that up to the beginning of our financial year was 81,600 Rand. That is up to the 28th of February. Then we worked out an additional amount of depreciation from the 28th of February up to the 31st of December. And what we did is we calculated that to be 24,000 Rand. That was, in step 2, the calculation of the depreciation up to the date of the sale. So when we now transfer the total accumulated depreciation, what we're going to do is we're going to take the extra that we've calculated for this year plus all of the depreciation that belonged to that asset in the past. So if we look at our information book, it should be obvious that what we need to do is take our 81,600, because that's up to the 28th of February, and add the 24,000 to that. So if I do that, I will take my 81,600 Rand, which is the balance at the beginning of the year for this asset, and add the additional 24,000. So that means that the total accumulated depreciation on this asset on the day that I'm selling it is this answer that I have here of 105,600. So what we're going to do is we're going to put that answer of 105,600 in our asset disposal account. 105,600. Remember, that's this year's sold plus all of the depreciation belonging to that asset. Okay, so that was the next step. Now, step 4, let's just tick that to show that we've done it. Step 4 is to enter the selling price into the asset disposal account, and that also happens on the credit side. So we need to see what the selling price of this asset was. And what you need to remember is that you can sell it in different ways. You can sell it for cash, you can sell it for credit, you can trade it in, you can also donate it, or the owner can take it for personal use, in which case it will be drawings. So there's various things that can happen when you are entering the selling price, and you need to know which one it is to be sure of the description that you're going to write next to the selling price in the asset disposal account. So let's look at the information. Remember, the information told us that we traded in this vehicle. So when we traded it in, we gave it to somebody else and got a new vehicle in return, and we are paying off that new vehicle. What that means is that this 32,000 was sold to a creditor. We traded this vehicle in and gave it to somebody that we owe 180,000 Rand to in exchange for this new vehicle. So we got a new vehicle worth 180,000. Now we owe the creditor 180,000, and then we give the creditor our old vehicle, which has a value of 32,000 Rand, because that is the trade-in price that this creditor is offering us. That is what the creditor is prepared to take off the 180,000 and what we still owe the creditor at that period of time. So all we're going to do here, the details are going to be creditor's control. Remember, when you trade it in, the details are creditor's control, and that would appear in your general journal, and the amount is going to be simply the selling price of 32,000 Rand. That's the trade-in price, which we would write on that side. Remember, if you're selling it for cash, the details will be bank. If you're selling it on credit, the details will be debtors control. Make sure you know what details to write there by practicing different examples. Now we get to our final step, which is to calculate the profit or the loss on the sale of the asset. And to do that, all you need to do is balance the asset disposal account. I'm just writing AD to save some time. So when we work out the profit or the loss, all we have to do is identify which side is bigger and balance this account out. So if you look at this side, it looks like this is 144, and that looks close to 144, but it's about 137. So what we're going to do, I think the left-hand side is going to be bigger, so I'll write the total of the left-hand side on both sides. And now I need to calculate this balancing number over here. The way I do it, let's just get the calculator on the screen. The way I do it is I'm going to take the total of 144,000, this total over here. I'm going to subtract the 32,000, and I'm going to subtract the 105,600. That gives me an answer of 6,400 Rand. 6,400 Rand is therefore my balancing figure, which I'm going to write over here. Also General Journal. And here's where you need to remember which one is which. Remember, if the balancing figure appears on the credit side, you have made a loss on the sale of the asset because its cost price is more than what you received for it and for the use that you've had out of it in accumulated depreciation. So we would write here loss on sale of asset. If we had sold it for more than 32,000, if we'd sold it for say 40,000, then this side would have been bigger than that side, and our balancing figure would have been over here, and we would have had a profit on the sale of the asset. So I'm just writing this in here so that you know that the profit on the sale of asset appears on the debit side and the loss appears on the credit side. That's how you do your asset disposal account, mindsetters. Learn those steps well because they can help you in an exam. Okay, let's look at the last part of this question. The last part of this question is to complete the note to the balance sheet for fixed assets. Remember, this is note number 3. And we're completing this note on the 28th of February 2007. They also tell us that a total column is not required, and they tell us that some of the figures have already been filled in for you. I think I'm probably only going to have time to do vehicles, but you'll see that the vehicles numbers have been filled in for you at the end of the year. These 3 numbers have been given, but we need to fill in all of the numbers that appear at the top. Mindsetters, once again, as with all questions in a balance sheet, you need to learn your format of your financial statements very well. So if you look at the format of the financial statements, it starts off with the cost price and the accumulated depreciation. Make sure you know that this is at the beginning of the year. The 3 numbers at the top are at the beginning of the year. So we need to find the cost price and the accumulated depreciation of our vehicles at the beginning of the year. If we go back to the information, you'll see that they've given us that information right here. On the 1st of March, they've given us the cost price of 880,000. Circle it in pink so you can see it again. And the accumulated depreciation on vehicles is 250,000. Make sure you spot those 3 zeros. So they've given us the cost price and the accumulated depreciation. All we have to do is fill them in here. The cost price was 880,000. The accumulated depreciation was 250,000. And remember that the accumulated depreciation is in brackets. I always tell my learners, any word that starts with a D here, depreciation here, disposals, depreciation, and depreciation is always in brackets. All the others are positive because depreciation is subtracted and disposals are subtracted. We can now, of course, calculate the carrying value at the top. Remember, to get the carrying value at the beginning of the year, your formula is always cost minus accumulated depreciation. So to calculate that, all I'm going to do is take my calculator and say 880,000 minus 250,000, and that would give me the carrying value of my vehicles at the beginning of the year. That is this 630,000. 630,000. Okay, now we look at our 3 movements. And our movements are important. You need to know how they work. We've got additions, which is anything extra that we bought during the year. So our trade-in, when we traded our old vehicle in, we got a new vehicle. Remember, if you look at the information, it tells us that we traded our vehicle in for a new one. So what we did is we got a new vehicle which had a cost price of 180,000 Rand. This new vehicle was not in the business at the beginning of the year. We bought it during the year, so that is going to count as an addition. So already I've got an addition of 180,000. Remember, additions are recorded at the cost price. Now, the next thing that I'm going to say is quite important. So have a look at this piece of information, number 4. Number 4 tells us that we paid Urban Technics the following on the 28th of February. First of all, we paid them 8,000 Rand for installing a sound system in the vehicle, and then we paid them 3,000 Rand for repairing the air conditioning system in the vehicle. Abram, if I buy a sound system for my vehicle, you think that I'm making my vehicle more valuable?
I think so.
Definitely.
Yes.
So basically, if I'm installing a sound system, what I'm doing is I'm making my vehicle more valuable. I'm actually adding to its value. Okay? So you have to realize that when you install a sound system, or when you install a sunroof or a DVD player, or you install something in your vehicle that makes it more valuable, then this must count as an addition. However, if my vehicle breaks down and I repair it, I am not adding to my vehicles. I'm just restoring the vehicle to its previous state. So what this question is testing is whether you know the difference between an addition and a repair. Repairs just fix something that's broken. They don't add value to the thing that's been broken. So they do not count as additions. So this 3,000 Rand for repairing the sound system, the air conditioning system, would not count as an addition at cost. The only part here that counts as an addition at cost is the 8,000 Rand, which is the new sound system. So if we take this 8,000 Rand plus the 180,000 of the new vehicle, we are going to get 188,000 Rand. Here you can do that in your heads. That 188,000 Rand is my addition of a new vehicle, or of all new vehicles would be added at cost. So if I'm going to include here additions, I'm going to include here this 188,000 Rand, which is the new vehicle together with the sound system. When we're doing our disposals, a very easy tip to calculate our disposals is simply to go back to your asset disposal account. And when you're looking at your asset disposal account, the easiest way to calculate the carrying value of the disposals is to start with the cost price and subtract the accumulated depreciation. You just look at the first line of your asset disposal account. So you're going to take the 144,000 and subtract the 105,600. That will give you the carrying value, in other words, what the vehicle was worth on the day we sold it. And that is the piece of information that they want you to include in the fixed asset note. So if we go back to the fixed asset note, let's just quickly do the calculation here. We're going to take our left-hand side, which is 144,000. That was the cost price of the vehicle. We're going to subtract the 105,600, which is its accumulated depreciation. So on the day that we sold it, this vehicle was worth 38,400 Rand. 38,400 Rand, I'll just quickly fill it in over there. So remember, to do that calculation properly, it will be 38,400 Rand. This is always the carrying value. Finally, we need to put in the depreciation, and this is all the depreciation for the year. We've already calculated that, mindsetters. Look, I've done it here already in the previous question. We calculated the total depreciation for the year. That was this number of 177,200. All we still have to do to finish the question is to take that 177,200 and put it in our fixed asset note over here for our depreciation for the year, 177,200 Rand. Check to see for yourself that you get these balances at the end when including those calculations. I think that's all we have time for today, Abram.
Thank you so much, Martin. Otherwise, mindsetters, we've run out of time. I hope you enjoyed the lesson. If you still have some questions, visit our help desk. Edit also on Mixit. It is on mindset.co.za/help desk. From us to you, we just want to say, yip, peace.